Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So we've got the inflation numbers, market reaction. Well, it is in general logical, just because, as you know, in general it was very spot on actually to expectations, and 6.5%. But I think that a few moments have been unsigned in recent inflation reports, so we will take a look at in our weekly report. In two words, speaking that if you're careful enough and you watch for the numbers, you could see that although the nominal inflation is dropping, which is mostly because of the collapse of the real estate market, the demand for some furniture, for components of the for repairings in houses, so for all this stuff, its price is dropping as well. And energy component is also decreasing, but if you'll take a look at the core inflation, it remains stable. Ex energy and food, you could see the inflation stands at the same 5.7 level. So you could see the conversion of the nominal inflation and the core inflation. And it tells you that real inflation, it stands in the core inflation, it's more stable. And it totally corresponds to and match to idea of the structural increases that we discussed. We said that inflation probably will drop somewhere to the 5.5%, but it will remain stable for a long time. Whatever, despite whatever steps Fed will take, if even they will raise rates to the 10%, the core inflation mostly remains the same, because it is not monetary inflation. This is structural inflation. And that's actually what's now is going on. But currently markets are too inspiring with the nominal inflation, and you will see that decreasing of the pace. So also, by the way, another trick, guys, that when you're comparing and calculate year-to-year inflation, you are matching the current rate to the rate in year before. And since we are going forward in time, so at one point, at one moment, you will start to calculate the current inflation to the level that was at the highest numbers a year ago. So, for example, in the spring on the 2022, this was particularly the period where was really very strong inflation. And if you compare to these two numbers, you will see that nominal inflation starts dropping. But in fact, the cost of the goods, as they were standing at the same level, they remain standing at the same level. So this is another trick exists. So otherwise speaking, I do not see really big shifts in inflation. I do not see that actually it has dropped significantly. And we will show you this in a weekly report where you also could see this. It means that Fed remains hawkish and remains at their own trend of the rate hiking and its policy to keep rate high for considerable period of time. And all this stuff makes me think that markets beat, well, some overreacting and think that it is really big shift, but in fact, well, nothing drastic has happened. So we will see, because this inspiration, it's really could is housed really fast within 1 month, maybe, or even earlier when the Fed start act in their meeting at the end of the January, starting with the February and the 1st of the February. So the situation could change. Meantime, this market has created some more or less significant upside momentum. Market could, until this moment, since it has more than 2 weeks until the Fed meeting, it could keep creeping higher. So today, so obviously, we will not consider really significant targets. So now I think that 109, 108.93 next extension here will be enough. For performance, market is not at overbought, so it easily could complete this target today's session. But potentially, if you will take a look at our monthly chart that we discussed in the weekly report, you will see that next strong resistance level stands around 110.50, 111. So potentially, maybe, if momentum will be strong enough, market could try to pass this distance and reach the 50% major resistance on the monthly chart. This is also possible, but we will see it on the next week probably. Currently, well, I do not see really big setups for position taking. Definitely bears should sit on their hands and do nothing. Bulls, if you do not want to take the position for the weekend and consider only small short-term trading, since today's session, you probably could consider a few levels. I do not think that we need to really deep standing levels. We need to just this recent thrusting up, because with this upper direction, market has broken weekly confidence resistance 107.50 right there, this consolidation, and obviously to keep bullish context valid, it should not return a big down and should not drop back and start downward action. It means that we could use just near standing levels for position taking, for instance 108 or 8, 107.70, 107.88. This is confidence area. If somehow market will show some pullback here, you probably could consider this for possible taking long position on target around 108.93, 109 area. And so the only setup that we have for today. If not, then probably, well, let's postpone the active trading on the next week.